Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Monday, November 3rd. We have an exciting show lined up for you today. AWS and OpenAI are announcing a $38 billion deal, which will see OpenAI run workloads on AWS, while AWS will provide OpenAI with access to NVIDIA chips. We're going to break that down with Aaron Holmes, who covers Microsoft and all things enterprise software. We're also going to talk about a news story that he has out today about the challenges that companies are seeing with AI agents. Then I'm talking with the co-founder and CEO of Starcloud, the startup that just launched a satellite into outer space carrying an NVIDIA GPU. We'll also hear from a Google executive and the Vice Chairman of ServiceNow about each of those companies' AI playbooks. And we're going to wrap up the show with Tubi CEO on how the streaming and media landscape is changing and on that platform reaching profitability. It is an exciting show. We've got a lot to get to, so let's get right on into it. AWS and OpenAI have signed a big multi-year deal together that will see OpenAI run some of its workloads on AWS infrastructure. OpenAI will get access to massive compute power via AWS's NVIDIA chips. Joining me now to break down the news is our Microsoft and enterprise software reporter, Aaron Holmes. Aaron, it's good to see you. Happy Monday.
Happy Monday. Happy to be here.
So it's another week and another big deal that OpenAI is signing with a major cloud player. What did you make of the news this morning?
Yeah, so this is definitely good news for AWS, which has been growing at a slower rate than Google Cloud and Microsoft Azure in the last few quarters. There was a perception that AWS might have been missing out on some of this, AI cloud spending bonanza. But we've seen OpenAI is really eager to sign basically any compute deal it can get its hands on. And this is definitely a smaller deal than what OpenAI has committed to spend on Oracle or on Microsoft in the coming years. But it does get, AWS back into this conversation and, basically will help boost their AI cloud business in the coming years.
One of the things that I noticed in the announcement, there was no discussion of Trainium, which is the chip that AWS is working on. And this, of course, is also the chip that last week executives couldn't stop talking about on the earnings call. That was the same call where AWS showed that they have actually been able to accelerate their growth rate. What did you make of the fact that Trainium was not in the conversation? I feel like maybe this comes up later on. They just weren't ready to announce it yet. I don't know what to make of it.
Yeah, so this announcement, you're right. It specifically said OpenAI will be using NVIDIA chips in AWS data centers. I think it basically just shows that NVIDIA is still state of the art when it comes to GPUs for things like training and inference. Amazon has been trying really hard to push its own in-house chips with, mixed results so far. I think that the fact that OpenAI is opting to stick with NVIDIA chips, maybe speaks to some of the challenges that AWS has seen convincing these big labs to use Trainium at scale.
Right. Well, I want to turn to a story that you published this morning about how enterprises are dealing with AI agents. You looked at how companies are racing to integrate agents into workflows, but the reality is that many AI agents are underperforming in real life on the job. Why is that? What's going wrong here?
Yeah, so we're in this really interesting place where, AI is undeniably changing a lot of how work is done, and a lot of people are getting personal productivity benefits from things like chatbots or AI coding tools. But I've spoken to a lot of customers who have tried to deploy autonomous AI agents to take over things like customer service. And, they're still a little bit concerned by what they're seeing. For example, I spoke to somebody at Bosch Power Tools who wanted to build an AI agent to explain the user manual of different power tools, but they haven't been able to put that into production just because it kept hallucinating wrong information that could result in a customer getting hurt. So as a result, we're seeing AI labs actually devote more resources to helping these customers configure agents because I think it can be, harder than they thought originally.
And so this is the idea where the labs will actually give people talent, essentially saying, hey, take our people, let us show you how to configure these agents. I imagine that has to take a hit on profitability for these companies, no?
Yeah, I think we've seen OpenAI do this a lot over the past year, and now we're seeing Anthropic, but also, cloud firms like AWS start to step up their efforts to help customers configure agents. Anthropic and OpenAI for now are not really concerned with profitability, so they can pour a lot of resources into making sure that these pilots actually get off the ground and work effectively. And I think that's sort of the strategy that we're seeing play out right now.
What was the consensus from the people you talked to around whether or not these agents will make work completely obsolete, or whether or not they will be completely autonomous in some ways, or whether or not they will still need to have a human in the loop?
Most of the software executives or CEOs, founders I spoke to now feel like it's going to be at least a couple of years before AI agents can truly automate jobs, which is interesting because I think earlier this year, you had folks like OpenAI's, chief product officer saying it would be the year of agents. But I think, companies are starting to run into the harsh reality that a lot of these agents are not quite ready to work completely autonomously without having a human essentially check their work.
Right. Well, it's a story that is always evolving. And so, Aaron, I want to thank you for coming on. That is Aaron Holmes from our newsroom here at The Information. We've talked before on this show about the ambitions of some companies to build data centers in outer space. This weekend, one company at the center of that ambition, Starcloud, took early steps to making that dream a reality. On Sunday, the satellite company launched NVIDIA's H100 GPU on board a SpaceX rocket and sent it into outer space. I want to bring on Philip Johnston, co-founder and CEO of Starcloud, to tell us more about the launch and what's next for the company. Philip, happy Monday to you. It's a great Monday and for all things Starcloud, I imagine.
Thanks so much for having me on. Yeah, no, it's been an awesome weekend.
Awesome weekend. So tell us about the launch. Just walk us through it. What time did it happen?
Yeah, so launch was 1 a.m. November 2nd, so Sunday, very early morning.
Okay.
We had a bunch of us down at Cape Canaveral. I'm still down here in Cape Canaveral right now to watch the launch. So yeah, separated from the spacecraft about an hour after launch, and then we got the first telemetry back about 12 hours after that. And all
first telemetry back. What translate that for us, for those of us who don't know space speak?
So that's essentially when we pass over a ground station. It allows us to form a radio link, and then that will tell us, okay, is the satellite healthy? Have the solar panels deployed? Is the battery charged? Are we receiving data as we should be? So yeah, it's a very nerve-wracking moment up until that point. I think about half of all first-time startup satellites don't ever make this first contact. So it's a pretty nerve-wracking moment.
And the company is what, less than 2 years old right now?
Yeah, we started early last year, so 21 months.
Okay. What is the GPU? First of all, how many GPUs did you launch?
So it has 5, but the two that are interesting is one H100 from NVIDIA and one A6000 also from NVIDIA.
Okay. And what is the chip doing up there now?
Well, right now we still haven't commissioned it, so it will take about a month before we lower altitude to the point where we're going to be commissioning the chip. But what it will be doing is running high-powered inference on imagery from other satellites, as well as being the first to do things like training a model in space, first to do fine-tuning of a model in space. We're going to run a version of Gemini from Google Cloud. So it's mainly just to prove, this is really a demonstrator to prove that you can run high-powered terrestrial data center grade GPUs like H100s in space.
So you're actually using it to power some of the AI workloads from the other satellites that are up there right now. How do you deal with some of these issues with having satellites in space at all? Stuff like space debris, temperature control is obviously an issue. You got to figure out how to keep the thing cold, even though it is outer space. People think of it as cold. It's actually a bit of a more complicated issue than that.
Yeah, that's true. So for space debris and micrometeorites and things like this, you essentially, for us, we're going to be avoiding the most congested parts of space, which are where all of the other satellites flying between about 400 to 800 kilometers altitude. So for the first few are flying actually very low, 380 kilometers. It's what's called very low Earth orbit. You have a self-cleaning property of that altitude because you have low levels of drag from the upper atmosphere, and that kind of deorbits anything within a few months anyway. So it's very, very clean, those orbits. And then for the later versions of the satellite, we'll be flying quite a bit higher, around 1,200 kilometers altitude. And that's so that we're always in the sun. Also, not too many people want to fly there, so not too much. But you always have the risk of micrometeorites coming in from outside its orbit. And so for that, we need shielding on the most sensitive parts. So for example, the chips. And then we allow a certain degradation over time for other parts. So for example, the solar panels, you just allow parts to pass through them, essentially.
Right. Talk to me about the business.
Sorry.
Go ahead.
There was one part on cooling.
Cooling, right.
Yeah, we need very large deployable radiators. So that's the core IP that we're developing at Starcloud, is these enormous low cost and low mass deployable radiators to get rid of this heat.
Right. Talk to me about the business model here. Are you guys selling compute to customers? Obviously, this is a very small workload up there right now, but do you have companies to you saying, hey, we will buy the compute workload when you get it to outer space? What does the business model look like for Starcloud as a company? Who's paying you?
Yeah, for sure. So for the second satellite launching in October next year, that's about 100 times the power generation of the first one, 10 times the compute. We are going to be selling mainly to DoD, or we are selling mainly to DoD customers. So you might have come across this Golden Dome that Trump is orchestrating. It's basically a missile defense system. So I can't speak too much about it, but for example, you can imagine it would be useful to have high-powered compute. Apologies, high-powered inference on orbit in order to be able to do things like running inference on the imagery that you're collecting. For example, if you were to want to know, has a missile been launched in this location, you don't want to have to wait for a ground station, which is what they currently do. You want to ship that data immediately in space to somebody like us, and we can then provide an insight in real time.
I've got to tell you, Phil, we've had hundreds of guests on the show. We're still a new show. We've had hundreds of guests on. We've never had anyone sneeze. So that's sneezing on air is even I haven't done it. I'm sneezing all the time. So bless you. I should say bless you.
Well exclusive. You heard it here first.
Okay, so you're working with DoD, and what do these contracts look like? Are these, I don't even know how pricing would work for something like this.
So in the end state, we'll be pricing ourselves a bit similar, very similar to how cloud providers would, people like CoreWeave and Lambda, how they would sell compute to the hyperscalers. So it's basically dollars per minute on GPU time. That's the end state. For the initial phase, the DoD has a lot of programs to fund R&D, and so we'll certainly be going up to some of those opportunities. And that's really more like a milestone-based opportunity.
Right. Well, it's a big accomplishment, and it's certainly one of the more fascinating stories we've had on the show. Philip, I want to thank you for coming on. That is Philip Johnston, CEO of Starcloud.
Thanks.
Last week, Google Cloud put up some impressive numbers as Alphabet reported quarterly results. The division accelerated its growth rate to 34% and operating profit jumped dramatically. Of course, Alphabet is also upping its CapEx significantly to stay competitive with its AI footprint. I want to bring on Oliver Parker, Vice President, Global Generative AI Go-to-Market at Google Cloud, to talk about this moment for his group. Oliver, welcome to the show. It's great to have you.
Good morning, Akash. Good to meet you.
So this is kind of an exciting week for Google Cloud here. You're coming off some big earnings, obviously. Just can you give us a little bit of an overview here? How do you structure the portfolio of work that you oversee? Because you got a really long title, and sometimes we just want to translate for people what you even oversee.
Sure. So I oversee really what our AI go-to-market is as it relates to the cloud division. So obviously a lot of partnership across other parts of the company, and really what we're doing directly with our models, really the platforms for developers, as well as new areas that we're focused on. And we made a launch a couple of weeks ago with Gemini Enterprise. So in the full stack, which has obviously been a really big differentiator for us and where many of the customers are actually partnering with us. So yeah, that's my responsibility, really what we're doing in the cloud division around AI.
And so we're going to come back to the company strategy in a minute, but we saw the news this morning, OpenAI and AWS signing a big deal together. Do you see that deal as an opportunity for Google Cloud or a threat to Google Cloud?
Well, look, I think I probably wouldn't want to comment on what AWS and OpenAI are doing, obviously, as you can imagine, but I think we've seen sort of more broadly in the market and some announcements that OpenAI have been making with ourselves as well, just in terms of the compute capacity that they're seeking. So again, I think this is just part of a broader industry requirement around compute and power, and really people trying to figure out distribution of their models. And obviously, we have a unique position there where we obviously support distribution of many other people's models, as well as obviously our own models, and obviously being heavily invested for a long period of time in our own silicon with the TPU platform too.
And how does the deal today compare to the work that you guys are doing with OpenAI?
We didn't share the financials on our partnership with OpenAI. Obviously, we did share financials, and you've probably seen that around some of the work that we're doing with Anthropic a couple of weeks ago. But I think if you sort of look broadly at the industry, what OpenAI are doing, just in terms of sort of the compute requirements that they need, I think that's been pretty open in the industry right now. And I think there's lots of stuff that Satya and Sam have been talking about too. But maybe it'd be good to talk a little bit more about what we're doing, and hopefully that's of interest to you.
So I want to talk about that. So TPUs were a big point of discussion on the earnings results last week. And one of the questions I had for you is this sort of sets up Google nicely for sort of this end-to-end playbook as it relates to AI and selling workloads to enterprises. When enterprises are coming to you and to Google Cloud broadly, are they asking you specifically saying, hey, we want this proportion of our workload to be run on TPUs, not on GPUs? Is that something that you have to sort of convince them on? What does the dynamic of that discussion look like?
Look, I think it really depends on the kind of customer that you're talking about, right? So you have obviously some of the very progressive digital companies, especially some of the startups, that are looking to build lower down the stack. And then you have more traditional enterprises that are really looking for us to be able to manage a lot of that complexity. And I think that's honestly the uniqueness of what we offer here, which is really we have partnerships at all the areas of our portfolio. And again, depending on the company, whether they want to really work closer to the silicon and to the hardware and to our accelerator platforms, right the way through to developers that are looking to leverage, platforms like Vertex for choosing our models as well as anyone else's models, including companies like Anthropic, right the way through to a launch that we made a few weeks ago, which Sundar referenced actually on our earnings last week, really around things like Gemini Enterprise, which we sort of see as sort of the front door for AI at a business level. And again, really depending on where the clients are at and what they're building and how they want to have a partnership, we feel very good about being able to offer them choice and optionality at all areas of that stack.
And as it relates to the TPU and having that as part of the offering, how do you make the case to customers to use that as opposed to something like NVIDIA's GPUs?
Well, I think if you sort of look at what we've been very public about as it relates to TPUs, and again, the announcement with Anthropic that was shared a couple of weeks ago in terms of them sort of having access up to 1 million TPUs. Also look at what we do with Gemini from a training as well as an inference standpoint. So a lot of the serving and inference for Gemini is running through our TPU platform, and sort of outside of sort of that optionality or that option of choice, I think what's interesting is that it puts us in ability to be able to provide great performance, great cost, and great latency requirements around those models. So we're seeing a significant acceleration of our Gemini family. And a big part of that is really due to that actually running from an inference standpoint, as well as being trained on our TPU platform, as well as obviously GPUs.
When you think about all of the AI work that is happening at Google Cloud right now, how much of that is dependent on or based on usage-based pricing right now?
Well, we have different monetization, different commercial packages for people that are using tokens, right the way through to people that are using products that consume tokens, to really alleviate budgets and how they sort of operate. So we're providing flexibility actually across multiple different products, really depending on what clients want. And that's a space that I think we see continually evolving. And we're going to look to sort of make sure that we are leading in that space to be able to provide optionality and flexibility to many customers.
And when you say flexibility, how do you see that shift changing over time, that mix between outcome-based pricing, usage-based pricing, and then more fixed pricing models?
Well, I think, obviously the cost of tokens has been a sort of a well-tried and tested approach, with our APIs, as have many of the other frontier providers through sort of other hyperscalers. But we also now have products that are really sort of very AI-centric, which are sort of looking more at the per user per month sort of kind of approach that I think, the traditional SaaS industry has had for a while. But we also then have certain outcome-based capabilities around things like call deflection when you start thinking about AI for customer service. So I think we're going to continue to experiment and actually sort of make sure that we lead in that category so that really the value of AI becomes very apparent in terms of how people buy. And those conversations are ongoing, I would say, and we've actually done really well here because I think we've proven a lot of our AI is actually now starting to make a difference across many of the enterprises that we're working with.
All right. Well, Oliver, I want to thank you for joining us. That was Oliver Parker from Google Cloud. Okay. ServiceNow has in many ways been seen as a bit of an AI darling in the enterprise software world. The company has consistently grown its top line in or around 20% every quarter for the past few years. It also boasts some very strong free cash flow margins, and yet it is one of the biggest SaaS companies in town, which means it is also having to adapt quickly to the AI era. I want to bring on Nick Tzitzon, Vice Chairman at ServiceNow, to talk about where his team is taking the company. Nick, welcome to the show. It's great to have you.
Well, Akash, great to see you. Frequent viewer, first-time caller, as they say.
Well, we look forward to having you on more and more as the years go on here. I want to talk about the general vibe right now in enterprise software. You guys obviously reported earnings last week, and I think we saw the results there. But broadly speaking, I just want to take a step back here. I mean, look, the NASDAQ is up this year. ServiceNow stock is down for the year. All enterprise software stocks are down. And so I just want to take your temperature a bit. What do you think investors are reacting to here?
Well, I think it's perfectly normal that investors try to figure out exactly what the shape of the industry is going to be moving forward. There's a lot of noise. And frankly, Akash, you talk to customers and they'll tell you the same thing. Everybody has an AI story. So I think it's pretty natural that investors are trying to take a bit more of a wait and see approach. What I will say for ServiceNow, and Bill McDermott has said, the enterprise AI neighborhood is a different and new neighborhood, and much more advantaged for a company like ServiceNow than sort of the traditional SaaS neighborhood. So we're very optimistic that we can continue to curate the kinds of overperformance that you saw in our recent earnings.
Mm-hmm. Now, you put up some big numbers, $500 million in ACV, annual contract value, by the end of this year, and $1 billion by the end of next year. What are the challenges that you're seeing to enterprise adoption right now? Because even despite those numbers, we've been writing here at The Information about it is a slow and steady process for enterprises. What are the biggest hurdles that enterprises have to overcome right now with AI?
I think it's what I described earlier, Akash. You have every technology leader in every enterprise under a siege of incoming, because companies, frankly, that aren't sort of natural AI players or don't have a soundbite driven, who do have a soundbite driven AI strategy and not a content driven AI strategy. So I think people are trying to figure it out. I think they're trying to figure out, if I'm going to build a reference architecture for the next 5 to 10 years of my organization, and it's going to look different than the reference architecture from the last 10 years, how is it different? And what players belong in the new one that perhaps were in the old one, and which ones should be replaced? So these are complex conversations. I think for a company like ServiceNow that has been at the core of the technology estate, helping to govern all the different systems and helping to integrate these enterprises, those exact challenges are only going to be worse in the AI era. So it's again, it's a good sign for us and our strategic relevance for most of our customers, if not for all.
What about the people issue to all this? Because we had Vinod Khosla on the show a couple weeks ago, and he talked about the idea that the software is one side of the problem. If you don't have the right people on the ground, which in his opinion was the case for a lot of enterprises right now, they don't know how to use the software. They don't know how to make use of it. That's one perspective. The other perspective we've been hearing from people is, well, I can't just replace my entire IT team of hundreds of people. Where do you stand on that spectrum of where the issue lies, and how are you approaching that right now?
Yeah, I think it's more of a mindset challenge than, frankly, a skills challenge. It's a little bit of both, right? There's this ongoing debate: is AI revolutionary? It's going to change everything, how organizations run, or is it evolutionary, meaning you're going to see incremental improvements in some of these, sort of legacy processes? I would tell you that inflection point, is it revolutionary or evolutionary, depends in large part on the mindset of people. What do we want it to do? And look, if you have a change-oriented environment and a culture that says, we're going to embrace the possibility that this is a new business model, a new way for our business to serve our customers, a new way for us to make money, it's going to be revolutionary. And there are a lot of organizations that are taking that approach. I would tell you, the notion that you can go out shopping for a new team that's better and more AI native than the one you have, I don't subscribe to that. I think we at ServiceNow believe that you're going to see an increase in requirements for technical workers, for people who understand software. So I don't think this is a scenario where we can let AI become a code word for layoffs, because if we do that, right, I don't know how we expect people to embrace the unbelievable potential of what enterprise AI should really be.
Let's talk about the public sector business that ServiceNow has. You, of course, have a background in government too, so I know that this is a customer set that is very near and dear to your heart. I want to take your temperature here on Doge, because earlier in the year, Doge made a lot of noise. It was kind of the headline that was dominating the tech news altogether. Was, what softwares is the government cutting back on? What software is the government using to replace point solutions, for example, bringing them all under one hood? ServiceNow, I recall at the start of the year, right, the discussion was, hey, well, they're not cutting back on us. We're actually seeing it as an opportunity for us. We've started to hear less about Doge altogether. And of course, it's a very different conversation now that we're talking in the middle of a government shutdown. But if we just put the shutdown aside for a minute, what is the temperature that you're seeing from the government in terms of their software spend? And what's going on with Doge altogether? We haven't heard about it in a long time.
Yeah, I mean, it's increasingly hard to take politics out of these kinds of conversations. But if you take the politics out of the conversation, I don't think anybody would deny that the U.S. government needs to adapt and needs to modernize. It's frankly unsustainable for government to run, the way that it has. It's not, we don't have unlimited power to just continue to raise taxes or to cut programs. So we have to find more efficient ways for these agencies to run. I don't think that's a controversial statement. And I think many of the people, Akash, who work in government are perfectly up for that conversation. They want to be part of a change. They want to be part of a change that's positive, that provides a better citizen service. So when you look at a platform like ServiceNow, which is only in the early days of its deployment in government, I think the government customers that we talk to believe that we are 100% part of the AI future. I think they believe that lack of integration is a big challenge for them. I think they believe homegrown solutions that maybe were built 10, 20 years ago that people aren't using. I think that's part of the problem they have. So whether you call it Doge or whether you call it modernization or whatever you call it, like government wants to change. And for us, we see that as a massive tailwind for what our platform can do.
Let me ask you one last question here about the chips angle to the AI story. We have talked a lot on this show about NVIDIA and alternatives to NVIDIA. We saw last week that Google's TPU was getting a lot of traction in their earnings. They were talking about AWS obviously has their Trainium chip. We saw a big deal this morning. Although it didn't involve Trainium, we saw the deal between AWS and OpenAI this morning. You work with all the hyperscalers. That is one of the big value props for ServiceNow. Are you only using NVIDIA chips right now, ServiceNow? Are you using Trainium, TPUs? Where do you stand on that?
So look, NVIDIA is a terrific partner of ServiceNow. We've been partnered with NVIDIA for years, and we're building and training models on, NVIDIA technology for a long time before it became fashionable. I will say that our orientation is to do whatever our customers need us to do. We have an inherently heterogeneous tech stack. I would be remiss not to say that NVIDIA is a priority partner. So great friends, and their technology plays a major role in how we think about continuing to enhance our architecture for the future. But we're also open. We've always been an open platform. We always look to diversify the stack. So there's plenty of opportunity for everybody. But we remain super proud of the NVIDIA partnership. We watched Jensen's keynote with great interest and appreciate the reference he made to ServiceNow, and we repay that with full kindness.
So are you using Trainium or TPUs, Google or AWS chips on any of your workloads right now?
Let's just say that it's a heterogeneous stack, but NVIDIA remains the most important partner we have.
Right. Great. Well, Nick, I want to thank you for coming on. That was Nick Tzitzon, Vice Chairman at ServiceNow. Okay. Last week at our WTF Summit, we welcomed Tubi CEO Anjali Sud to the stage to talk about the dynamics in the streaming sector. Just a day after she spoke at our summit, Fox Corp announced in its earnings that the free ad-supported digital streaming service turned profitable. And so I want to bring on Tubi CEO Anjali Sud to the show to talk more about the trajectory of the streaming service that she's running. Anjali, welcome to the show. It's great to have you.
Thanks for having me, Akash.
So you've been at Tubi now for in or around 2 years, I think now, and the streaming service just turned profitable. How did you do it? Walk us through the playbook here and how it happened.
Yeah, I mean, look, I think Tubi has really found itself with the right business model at the right time in streaming, and with the advantages of scale. So we're free streaming, 100% free to consumers, no paid tiers, no paid ad tiers. And fully ad supported. And what we've been finding is just, in a streaming environment where prices are increasing, there's more fragmentation and friction. Consumers, and particularly younger consumers, are really just gravitating to free. And they're willing to sort of engage in the value exchange of ads if they don't have to pay. And so that business model has really been resonating. We've invested a lot in growing our catalog. We have the world's largest collection of movies and TV series. We now have creator content on the platform. We have originals. And I think as we've improved that value prop, we've also seen momentum. And lastly, we just have sort of the flywheel that gets better the more and more users and data and scale we have. So about over 100 million people are watching 1 billion hours of Tubi a month now.
Hmm.
And so you can imagine if you have all that engagement and all that usage paired with this long tail library of content, our ability to deliver better personalized recommendations and experiences that then drives more advertiser attention and demand, that then allows us to reinvest in our content. It just all sort of starts to really move in that flywheel. And
Right.
so what's been exciting is the way we've gotten to profitability hasn't been by cutting costs. It's been by growing efficiently and just improving that value proposition.
So you haven't had to cut the expenses at all. It's all been top line growth.
Yeah, our overall operating expenses are growing, and our content investment in particular is growing. And
Mhm.
again, this is at a time when I think a lot of other streamers are having to pull back. And so it really is sort of just the momentum of the model and the audience kind of gravitating towards us.
I want to talk about that content investment because you guys have been very open about how you are leveraging the creator economy and helping creators get on your platform with their own films and stuff like that. And I wanted to get a sense for how these deals are structured, given that you are a free platform. When you have a creator and you sign a deal with them saying, okay, we'll help you make a show or a movie, given the following that you have or the content that you produce, are you giving them a cut of the ad sales? Are you paying them something up front? What does a deal like that look like?
Yeah, the majority of the deals we do with content creators, whether it's Hollywood or creator economy, tend to be a share of revenue, of advertising revenue, which we love, right? The incentives are totally aligned. We win, the creator wins. And that has actually scaled remarkably well. When we do exclusive content or original content, that's when you'll often see a slightly different model, but it looks pretty standard as anything else you might see in streaming or in the industry. And so I would say, the thing that has really differentiated Tubi is just our willingness to work with a much broader and diverse set of storytellers, and then our ability to help those stories find an audience. So because we're long tail, you don't have to have a mass audience to actually do quite well on Tubi. We're very good at finding specific fandoms. Maybe you're a horror fan or you're a true crime fan, and helping those consumers go deep in the content. And I think that's actually been a really unique thing that has worked really well for us. It's very similar to what YouTube has done in UGC and short form, but we're really doing it in long form and in movies and TV series.
So how do you think about competition here? Because as you sort of target the younger demographic here, or Gen Z, or people who we think of watching a lot of these creator economy influencers and stuff like that on social platforms, you do have competition from TikTok and from Instagram. And on stage at our WTF Summit, you talked about the attention economy being the biggest form of competition for you. TikTok and Instagram, we've seen the reporting that they are actually looking to launch their own TV apps. How do you plan to compete against them?
Yeah. Listen, attention economy, your competition is anything that takes people's attention. So it is competitive. And ultimately, I think competition isn't a bad thing. It forces you to improve the experience for your fans. But I would say, we have spent over 10 years at Tubi obsessing around the experience for long form storytelling. And everything I've learned over the last 2 years, Akash, would tell me that it is very, very hard to bring in many different formats and mediums into one experience and to offer that same highly optimized, delightful experience. And so I think we actually have a pretty big advantage in long form. It's actually harder, I think, to go from short form to long form than it is in our case to help creators who want to do long form come into our ecosystem. I can tell you, we started bringing creators onto the platform only 4 months ago. We have nearly 10,000 episodes from some of the world's most popular creators now. You're going to see us add more exclusive and original content. We announced our first original film slate with creators last week. But what I can tell you is so far, We have creators who are making more money on Tubi already than they have on any other platform. And they're able to do projects that are, artistically places they have wanted to go and have had the skill sets to go. But it's been very different than when you're in a short form environment and the way the algorithm is optimized.
Let me ask you two quick questions before I let you go. Would you ever consider launching a subscription product at all?
We have no plans, and I will tell you, we are doubling down so much. We think the future of entertainment is free. And the reason is because we believe that consumers are going to demand that lack of friction. And we also think that storytellers, they want their stories to reach the widest audience. So we're doubling down on free. I think we actually have a brand campaign out right now called Free Forever. We actually want
Forever. Okay. All right. No subscriptions ever.
Yeah, we are really leaned in here. And I think when you have strength, you lean into it.
And one question before you go, we've seen sort of the carriage battles, I guess, play out last week. Of course, the Disney YouTube TV dynamic. I mean, look, carriage battles are a dime a dozen, really. This one, I'm sure it'll get sorted out. But what do you make of this one, and what do you think it says about the industry as a whole right now?
It's not that surprising. I mean, as you have noted, carriage battles have been sort of pretty common. And I think you're just going to see more of that in this environment. It is a more competitive environment. There is going to be more of that battle for attention. And so the stakes are higher. And then I think the other big thing that sometimes isn't clear to sort of the outsider looking into the industry is you have a real demographic shift that's underlying a lot of these deals, in that, most of broadcast television and sort of pay TV or the cable bundle, those audiences tend to be much older. And a lot of services are really trying to move more towards younger audiences. So I think you're just going to see potentially more sort of battles and higher stakes negotiations play out in the coming years.
Right. Well, Anjali, I want to thank you for coming on. That is Anjali Sud, the CEO of Tubi. Well, that does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I'm already excited for our next show tomorrow. Have a great rest of your Monday. Bye-bye for now.